India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thursday morning, going towards the end of the week, and it's getting a little interesting. Not a big change as far as global markets, US equities, especially here in India. We seem to be at a bit of a crossroads. So lots to track. I'm Prashant. With me, my colleagues are Nigel and Survey. Guys, good morning.
Hi, morning. Counting down to the weekend, so we've just got 2 more sessions to go. But so much happening, right? Overnight on Wall Street, so many announcements, so many news reports, and never a dull moment. But for us, we have to see what our bulls can manage.
Well, and today it's going to be the start of earnings, right? The big one comes out later today. TCS, there's a lot of expectation. The stock price told you the story yesterday as well. Let's see what they can deliver, because tech is one space that the street believes will outperform towards the end of FY25 and FY26. So that's going to be the big cue today. Well,
and the markets will react maybe, actually not today, but maybe tomorrow. Because the numbers are expected last hour of trading, towards the end of trading. Well, let's just quickly run you through the sort of setup as things stand right now. So, I'll start with the basic change, which is actually mixed. If you look at equities, not very much, right? Absolutely mixed. One index up, one down, but hardly anything. The thing is, tonight, basically, a Thursday for the US is a stock market holiday. It's stock markets, NYSE, Nasdaq, they are shut tonight. And then bond markets are also closed. So in a way, markets last night were also sort of reacting to that, which is a closed session, which is a no-show, no session. And then, of course, Friday, that is tomorrow, you'll essentially get straight into that NFP, the monthly jobs data, which is an important one. So gets a little tricky. Now, S&P on your screen, Nasdaq kind of slightly lower, but flattish. 10-year yield unchanged, 4.69. But the 20-year, the longer end of the yield curve, big move, right? The 20-year yield rose above 5%. And by the way, in a way, this kind of mirrored what happened with the gilts in UK, bond markets in UK, where we saw a very sharp move. I mean, if you look at the pound, there was a 1% crack. Now, these are all largely related to government spending, debt deficits, etc. But that's another conversation. But it's interesting that here in the US as well, the longer end moved much more sharply than the short end. The dollar index, it ended above the 109 levels, and I think emerging market investors won't ever like it. It, by the way, got to about 109.5 and then kind of pulled back a little bit, but still 109 once again on the screen. Oil prices a little lower, $76 a barrel. Just a few sort of news items, data, whatever you want to call it. You had the minutes. Now, Fed pricing is coming back, and we said this yesterday as well. Fed pricing, and what the Fed will do is once again sort of square and center. And this was the big talking point through the last 10 days of 2024 as well. And there's been a big shift since the last December FOMC meeting. 2 cuts in 2024 as opposed to 4. Some were talking about 15, 20 days ago. And of course, the minutes last night kind of echoed that as well. They basically said that expect a very careful policy approach from the Fed in the coming quarters. Those were the minutes. Now, there was another news item. CNN, the news channel in the US, reported that Trump is considering a national economic emergency declaration. This is just to justify universal tariffs on friends and sort of, enemies alike. So this is, in a way, kind of supportive of the argument that big-time tariffs perhaps may be coming. After NY close, you had the AI and tech sort of stocks which came under some pressure. In his last push, Joe Biden, the current US president, is trying to curb NVIDIA and AMD from exporting AI chips. So we'll see if there is an implication for that sector, but not very much exposure here in India. It's in markets like Korea, etc. Now, just to tie in the levels, and I said we are in a bit of a flux. A resistance for the Nifty. We by the way, closed where we started yesterday. 23,700 was the start. Low was 23,500. We left off at about 23,700 once again. Almost 23,700 by close. So resistance comes in at 23,755, which is the immediate 40 hourly exponential moving average. and 23,813 is the next resistance after that. That's a Bollinger Band level. Support comes in, which is the low of 31st of December, which is 23,460 for the Nifty. For the Nifty Bank, resistance again is the hourly average, which is 50,011, and then the 40 hourly, which is both hourly averages for 50,418. So these are the two immediate resistance for the Nifty Bank. And since the Nifty Bank made a new low, lower than what we saw in December, that becomes the support, which is 49,390. That was the sort of new low, which was set in this recent move yesterday. So that's up on your screen. GIFT Nifty will come up on your screens, and I think it gives you a sense of how we start. 63 points lower. Remember, I want to say this. You've got two very important events lined up over the next 20 days. One is, of course, global, which is the Trump inauguration. And then I think you've got the union budget. Now, whether, something will come out of the budget is another matter, but we can certainly expect a lot to come after the Trump taking over, which is the 20th. I mean, I think we can already see that in terms of how rates in the U.S., rates market in the U.S. is actually behaving. So a slightly softer start to begin today's session. Surabhi.
Absolutely. Market's not feeling too great because of those twin factors. The fact that, you're probably expecting lesser rate cuts in the U.S., and that's what the minutes indicated yesterday. And the year-end report, that also caused a bit of a flutter because that report actually came out before U.S. market trading began, and it started showing up in the currency and the yield markets early in the evening. This possibility of Trump using IEPA, which is the International Emergency Economic Powers Act. So let's see. I mean, I think all options are still very much on the table. And a lot of the hopefuls who are expecting that, this is more bark than bite, perhaps, can't say that conclusively at all at this point in time. So, like I said, the reaction was showing up in the currency and the bond markets early on. And that's when the U.S. 10-year yield had topped 4.7%. Subsequently, it retreated. But even then, with the whole rate cut situation, plenty of leg up. U.S. dollar obviously has been above 109 once again for the better part of the overnight action. In Asia, markets are feeling the heat. So the color is predominantly red, barring the Hang Seng in Hong Kong. Most Asian markets are actually lower, whether it's Australia, whether it's Nikkei, whether it's Singapore. Markets are down. The additional data point that we have in Asia today is the inflation print in China. And that's telling you how weak the economy is. Because if you're looking at the consumer inflation number, the pace of increase has slowed down even further in January. It's just 0.1%. That's the increase in consumer inflation versus 0.2% in the previous month. And at the producer level, prices are contracting. Producer inflation in China has declined 2.3%. So, and this is, I think, the 27th month in a row that producer prices are in deflationary territory. So all the talk of stimulus, the measures, etc., clearly not showing up in inflation. Okay, so that's the global picture. Talking about the domestic picture, it's the same story, the same song that we sing on a daily basis. This FPI selling, no let up on that. Yesterday's number is a net sell number of 3,360 odd crores. Domestic institutions were buyers. Remember, there is a domestic mutual fund data coming out today. We'll track it very, very carefully at around 12 o'clock to see if the retail, inflow of money continues to be as strong as it has been. But that FPI number continues to be disturbing. Earnings season kicks off today. So TCS expectations are very, very muted, actually, if you're looking at top line growth. Dollar revenue could actually decline by 0.6%. This is because of the cross-currency sort of impact. In constant currency as well, are we talking about growth? Well, hardly 0.2%. Though the street expects, Rima's poll said that the margin picture could be improving, maybe a 40 basis points improvement in margins. The commentary is going to be far more important. Let's see if the management guides for more confidence in the US market or not. So that's TCS, but TCS is not the only one. There's Tara Alexi, there is IRDA. So basically the season kicks off in full bloom today. A couple of other important news points, and we'll tell you more about these stocks as we go along. Lupin could have an interesting session because they've got the establishment inspection report for their Pithampur facility. This has been a long-standing issue, and the action is VAI, voluntary action indicated, which is not as severe. Watch out for that. And of course, Manappuram, you would have heard the news. I mean, it's been all over since last evening. The restrictions on Asirvad, the MFI, have been lifted. So what does that mean for the stock in the company? We'll tell you as we go forward. But first, we have to deal with these global cues, Nigel. They don't look too good.
Well, that's right. And today will not be short of action because we have the expiry that plays out as well. So that's the added element. But as you all said, overnight, those three big indicators, they continue to remain elevated. And the hope is maybe the dollar index peaks out before President Trump takes over presidency, because it's been very, very strong. And there's a lot of rhetoric that's, that we're hearing about. But the hope is that maybe that 109.5 odd does hold out. So that's going to be an important point. The other two as well, continue to remain a little bit higher, though Brent crude prices, if it's below $80-85 per barrel, well, the Indian bulls will be very, very happy on that front. What did the FIs do in yesterday's trading session? Well, they added shorts yet again. Close to 19,000 short contracts is what they added, which is way more than the long edition. And I'll tell you what, when they add some shorts, it's not such a bad thing because you're not getting follow through on the downside. So you'll want the recent low to get protected. How are they stacked up right now? The FIs, well, yesterday they added some short positions, as I said. So net shorts went up for the FIs. And the clients, well, they are adding long positions. And yesterday there was close to around 30,000 contracts that they added on the long side. Both of them on opposite ends of the spectrum. But since, the stock futures have been something that we have been talking about, let's do a quick check of what they did out there. The clients, after a small break, they went ahead and they added long positions yet again on stock futures. Last couple of sessions, they were unwinding some long positions out there. So they added some longs yet again. While the FIs, they took a bit of a break. Not to say, but they continue to remain net long on stock futures, both the clients as well as the FIs. So that's telling you stock-specific action will continue on that front. There are various stocks that will do well. The options data is important since today these contracts will expire. 23,700 call, 23,500 put, both of them were fairly active. And just punching in those levels, those numbers, you get the levels. So on the upside, 23,800, that becomes a bit of a resistance mark that you're looking at. This is just for today. The near-term resistance going by the options data. While the reference point on the downside is the recent lows that we have made. So 23,450 to around 23,500, very, very important mark on the downside. The Nifty Bank is the problem pocket. Even yesterday, it was a bit of an underperformer. And all of the last few days, it's making lower highs. So today, if you want to look at a level, this is the level you should look at on the upside. You'll want the Nifty Bank to actually make a high higher than what we saw yesterday. Because on a day-to-day basis, it's making lower highs, which isn't very, very good news. So the Nifty Bank needs to get its act together. And finally, if you're looking for support, yesterday I pointed out that Reliance Industries could be the stock to watch. I think ITC is coming into its own. Yesterday, it made a low of around 435. The stock then, in fact, did see a big bounce. There's a fair bit of delivery-based buying that we saw. And we also saw some long build-up as well. So that's the one that I'll keep an eye on. ITC at around this 440, 445 levels looks interesting. All
right, Nigel, thanks very much for that. Well, let's quickly run you through some of the commentary which is coming in as well. Harold Van Linde of HSBC says that after annualized growth of 25% in recent years, profits appear to have softened while valuations are elevated to 23 times forward earnings. As earnings disappoint, consensus has cut FY25 growth expectations for Nifty from 15% to 5%. Investors are likely to reevaluate their positions, limiting market returns, and hence they downgrade India to a neutral rating. That's the view which is coming in.